Hi and welcome to the Market Alert for Wednesday, the 7th of August 2024. So capitulation, yen plunges, Nikkei soars after Bank of Japan, Uchida says will not raise rates when markets are unstable. So let's see how long that lasts. The bank will not raise its policy interest rate when financial and capital markets are unstable. Well, it was raising the rates that caused the instability. So I would assume that the next time they do it, they'll have the same problem. Stocks rally after recent bloodbath while bonds take hits. And economic news for today is 6 p.m, just a bond auction. So there's nothing else today to get in the way of the markets returning back to the upside there. So with that, let's move along, have a look at the markets and kick off with the Dow. So as can be seen, we've still got that huge volume from Tuesday. Monday actually, not Tuesday. Yesterday was Tuesday, and the market's showing even again way above average volume and moving to the upside. Price is currently above the 5-bar moving average, and of course we're oversold there as well. In the 30-minute chart for yesterday first, the market was down in the electronic session, trading down to the DP. We then had a retest of the DP at 2:30 when the market opened. You can see the volume coming in there, and also the momentum was already on the upside. So despite making a lower low at 2:30, the momentum was already moving to the upside, and prices continued until we got an hour before the close, and then the market pulled all the way back to the DP once more. Overnight, prices have moved higher above the close and coming off the DP area for yesterday, trading up to the R1 so far, but not above yesterday's high. So plenty of opportunity to do this. As you can see throughout the night, every 30-minute bar is green, so good momentum there to the upside. In the German DAX, prices have got to get back above the 200 MA in the German DAX for sure in order to reverse this current move to the downside. Again, we've got the big spike on Monday in volume. We are oversold. Yesterday there was a bit more selling around, but the markets are up overnight. It needs to close above the 5-bar moving average, but more importantly, prices need to close above this 200 MA in order to move higher. In the 30-minute chart, very choppy yesterday, but moving down with the choppiness. You can see that spike down and then back up to the DP, which became resistance. Market back down to the the psychological level there, the BRN, which was at, let's just get the number for you, 17,250. So the market then coming off this up to the close, and then back down and retesting this overnight. So we're now at the 17,300 level there. We've got the close, and we're through the DP and heading back to the high, which we just got within a few points of actually achieving this. But the moment the market's showing its first sign of weakness, again like the Dow, the market's got green bars all the way up every 30 minutes for the overnight. So certainly been some buying on the electronic markets, with the Nikkei moving back to the upside. In the S&P 500, above the 200 MA, managing to get back above this on Monday. Tuesday, a bit more weakness, but overnight following the Nikkei as well in the S&P 500. A long way from the all-time high though at the moment. And in the 30-minute charts, down, again retesting the support area, again with momentum already moving back to the upside. And then you've got the buying, market up before the close, market all the way back down to the DP, back above the DP overnight, and again green all the way, a bit of red inside of this bar. We need to get above the R1 to get back above the high there. In the FT 100, the market also, again, climatic volume for Monday, oversold. Some more volume for yesterday as well, off the 200 MA, heading back towards the upside. And in the 30-minute chart, you can see the continuation of the shakeout early on, and then in the afternoon moving with the Dow. Bit of a pullback, nothing like the Dow and the S&P had. Back to the DP, and the market moving to the upside, and also the market trading above yesterday's high, which is the only one in the stock indices that I look at that's actually done this at the moment. R1 is just above there. In the US dollar, this is moving back to the upside following this huge support the other day. Massive volume, so no surprise to see this is actually moving back to the upside. So what's the impact on the metals market with the dollar moving higher? Well, in silver, the market is still sitting on the 200 MA there, trying to move back. But if the dollar's going to continue to move back to the upside and rally, then silver is going to get moved to the downside, that's for sure. They'll seize that opportunity. If silver can go down when the dollar's going down, when the dollar's going up, they're certainly going to take advantage and hammer the price lower. So I'm still looking at $26 there for the price of silver. 30-minute chart, very choppy. Market down, market back up, market down, 89% retracement, and then back up to the close of Monday before being pulled back once more. But overnight price is moving higher, but at the moment we've got some weakness coming back into the market now. In the gold price, also prices above the 50 EMA, and in the 30-minute chart you can see yesterday getting hammered quite a bit, actually more so than silver, as the market trends down there. So we're going to see a difference in the gold-silver ratio in a moment. Prices coming off the low of yesterday, but stopping at the DP and the 50 EMA there as well at the moment. So again, we just need to see how that pans out going forward during today's session. In the gold-silver ratio, we didn't quite get to 90 yesterday. There was plenty of time to do that and to get up to 92 as well up here, where we've seen the market trade before. So it's not over for me on the downside for silver. 90 is the area there. And over in the Far East, let's just have a quick look, see what's going on. 27.29, so still about a $3 difference there in the spread between the physical and the derivatives. Right, let's have a look at yesterday's market, see what happened. So in the pre-market session, the market moving up there. As we get into 7 a.m, there was a spike in the futures market, and then prices, you can see, pulling back slightly there, staying above the close until the cash market opened. We had a spike down through the DP, then they brought the market back, and then prices just trading sideways in a range. And there were no filled signals yesterday for both the morning session and the afternoon, as prices were just sort of stuck in a big range bars, which are outside of the criteria for the trading strategy. So I'll just whiz through all of this. As you can see, the market's up and down. Again, what I mean by this is you can see there we've got a 50-point range and another 40-point range there, saying there, good 30 points in just one bar. We don't normally get that, and that's outside the criteria for the levels of volatility that we, for years of doing this, seem to be the right levels for the best profit. So yeah, the market's moving higher there, breaking to the upside just after 3:30 and following the Dow to the upside, and then pulling back once more to the 200 MA DP level. And that's how it went on throughout the evening there. Okay, let's have a quick look at where the market's currently trading. And we're sitting on support at the R1. We're below most of the averages there, apart from the 200 MA, which is obviously going to be a bit further down, and there she is. So the market, if it does move lower, there's a 200 MA to catch it there. On the upside, you've got the resistance of yesterday's high that you need to get through as well. But at the moment, we've got support at the R1 for this market. Okay, that's it for this one. Let's see how today pans out. Like I say, there's only the bond auction tonight, so it's the geopolitics and any other things that turn up out of the blue. Other than that, have a great day, and as ever, thanks for watching. See you in the next one.